Well, thank you all for joining our webinar today for the launch of our UK Financial Services Market Report, created in collaboration with Beauhurst. Before we begin, just a few housekeeping points. So this webinar will be recorded, and the recording, along with the full report, will be shared on with you all afterwards. And if you have any questions during today's webinar, we encourage you to use the Q&A function on your bottom taskbar, and we'll answer them during the Q&As at the end of the session. So on the slide here, you can see our agenda for the next hour. Following a brief introduction, Callum and Henry, who have joined us from Beauhurst, will provide an in-depth overview of the report, highlighting the key findings and insights that can help you better understand the financial services landscape here in the UK. After the report, we'll do a Q&A session where you can ask your questions to Callum and Henry, as well as my colleague, Jack Finucane-Clark, who is our Senior Market Advisor for Financial Services in the UK. So to kick off, my name is Gillian Butler, and I am a Market Advisor as part of our UK team. My role focuses on supporting early stage companies with their UK market entry and growth. For those of you who may not have engaged with Enterprise Ireland in the UK before, we are a team of 30 people with market advisors working across all sectors, from healthcare to agri and construction to creative industries. We work across 3 offices in London, Manchester and Glasgow, but for all of us, our remit covers England, Wales, Scotland and Northern Ireland. And the UK is the largest market for Enterprise Ireland client companies. And in 2023, client exports to the UK grew by 6% to 9.97 billion. And most relevant for this group here today is that Irish financial services, fintech and business services grew by 13% to 635 million. This clearly shows the importance and the potential that the sector has for Irish companies. The UK financial services sector is one of the most dynamic and influential in the world. With its rich history and strong regulatory framework, it supports a wide range of financial institutions and really fosters a great environment for success. London, as a global financial hub, offers a highly skilled workforce and a supportive regulatory environment. But beyond London, there's also a lot of opportunities for Irish companies in places like Edinburgh, Manchester and Birmingham, which are also increasingly becoming more important financial centres. So Irish companies have long taken advantage of the proximity to the UK, the shared language and the strong bilateral relations to establish a strong presence here in the UK. These companies have brought their expertise and their innovative solutions, fostering a real culture of collaboration here. It is important to note, though, that in comparison to Ireland, the UK market is large, so it is essential for companies to be strategic in their approach to the UK. Understanding the market dynamics, the regulatory environment, and specific opportunities and challenges can make a significant difference in achieving success. At Enterprise Ireland, we're dedicated to strengthening the connections between Irish companies and the UK market. We've seen many clients successfully grow and scale in the UK financial services space, and we're excited to see many of you do the same if you haven't done so already. And we're here to help you along the way, and we hope that this report will be a useful resource as you do that as well. So I'll hand you over now to Callum and Henry from Beauhurst, who will run through the report, and we'll follow that on with the Q&A.
Great. Well, good to sort of meet you all. We're myself and Henry. We're from the Beauhurst team, who Enterprise Ireland have sort of commissioned to write this report on the UK financial services sector. I'm Callum Newton. I'm one of the senior researchers at Beauhurst within our research and consultancy team, and I kind of look after all sort of public sector research within the team. And I'll hand off to my colleague Henry to chat a bit more.
Thanks, Callum, and good afternoon to everyone on the call. Yes, my name's Henry Warwood. I'm the Managing Director of Research and Consultancy at Beauhurst, so lead the team producing these kinds of market insights for a variety of clients across the UK and outside the UK. Before we dive into the report, I'd like to take the opportunity just to give you a bit of an introduction to Beauhurst. Couple of reasons for doing that. Primarily, hopefully I can give you a sense of the data that we have and that we've analysed to form the backbone of this report, because we're maybe not your classic consultant. We're a consultancy team sitting within a data business. Beauhurst is a data company tracking the whole of the UK's economy. So we have data on all 5 million companies that there are in the UK. And in particular, we're working to identify the agents of change and innovation within those companies. So we look for the universe of companies that are receiving investment, growing organically, attending accelerators, winning innovation grants, using venture debt, any of the signals that you can see on the right-hand side of the slide here. So that gives us a view of within those 5 million companies of the companies that are making a lot of difference to various different sectors. That, for example, means we track the entirety of the fintech sector within the UK, and some of those companies form the backbone of this analysis. We're sort of a fintech company ourselves as well. So we're a SaaS data platform alongside our consultancy business. We've raised equity investment ourselves as well. And we sell our data into not only clients like Enterprise Ireland, but also to many of the financial services players, both incumbents and disruptors alike. So we in addition to our data, we have experience selling into quite a lot of experience selling into the UK financial services sector as well. Finally, just a word on what Callum and I get up to in the research and consultancy team. So producing reports like this, and don't worry, I'll let Callum get into the meat of it any minute now. But we produce various research reports for clients like the British Business Bank. We've worked with the Treasury, we work with Innovate UK, and a lot of that research is available freely on our website. So if you're interested in other sectors or the role of finance in supporting businesses, things like that, we do have many other publications freely available for you to use as well. So please do look on our website for those if you're that way inclined. Thanks. With that, I'll hand over to Callum to talk you through the report.
Excellent. Thanks, Henry. Great. So just to kind of kick things off, this is a super interesting report, and I kind of encourage everyone to go and have a read of it in your own time. But the purpose of this presentation really is just kind of run you through some of the top line findings, and then give you guys an opportunity to chat through any questions. So just an exact sum of UK financial services. It's UK financial services is big. It's a very big part of the economy. So as a combined turnover of around 1.15 trillion, which is equivalent to around 8% of the UK's entire economic activity. It's a large employer, so there's currently around 146,000 active financial services companies operating across the UK, and they employ around 3.5 million people. Financial services companies, there's lots of different parts and subsectors within financial services, which we'll break down a little bit later on in the presentation. But those companies, they hold assets currently valued at over £27 trillion, which is more than the assets held by the Bank of England and Bank of Ireland combined. Just to give you a bit of context of the scale and reach of the industry. This won't come as a shock to many of you, but financial services is often heavily concentrated within London, specifically the City of London, which is ranked second only behind New York for financial services globally. And it regularly sort of outperforms other peer markets such as sort of Paris, Frankfurt, and Singapore on industry international rankings. So just to kind of go over some of these points in a little bit more detail, financial services is a big part of the economy, but it's also growing very quickly. So the number of active companies in the sector has grown around about 76% since 2011, and account for around about 1 in 10 jobs nationally. So it's a really, really big employer and kind of reach across the entire country. So it also accounts for so it's around 8% of the country's entire economic activity, but also within this, within the sort of larger cohort of 146,000 companies, back to what Henry was alluding to around how we measure high growth companies, our different signals that we outlined at the start. There's around about 5,000 high growth companies, so they're the kind of main agents of change driving the economy and driving the sector. And we'll chat a little bit more detail about them later in the presentation. But they have an annual combined turnover of 73 billion and employ over 350,000 people across the country. It's hard to really overstate how important financial services are to the UK economy and to the government. So we know that sort of taxes on financial services account for around a tenth of total government receipts, and that's why a lot of government policy is often tailored towards supporting financial services. Although there are challenges, which we'll discuss at the end of the presentation, it's definitely a major sort of comparative advantage that's recognised by government. So what's quite interesting about financial services is there's a little bit of a misconception around what it is. I think when people think of financial services, they often think of sort of the high street banks, such as Lloyds, Barclays, and HSBC, and quite sort of deeply established and traditional firms, but they only account for around a fifth of financial services companies. A quarter of the companies within the sector are actually sort of in the seed stage of development, and a fifth are around in the sort of venture stage, so actively seeking investment, high growth companies. So really, there is a lot of sort of potential for Irish business, both in terms of an investment and export potential as well. So that's kind of the top level, sort of macro level insights from the report. So it's probably quite helpful now to chat through sort of some of the individual subsectors that are driving the financial services sector. So one of the most important and largest parts of the of UK financial services is the wealth and asset management. So there's around about 22,000 companies operating across the sector, and it's sort of the largest subsector in terms of combined turnover. So it's 450 billion in the last accounts, which is up 26% since 2020. The subsector employs around 1.25 million people. And the number of active companies within the space has actually doubled since 2011. The second is insurance. So insurance is very interesting because sort of wealth and asset management and some of the other subsectors we'll come on to are often highly concentrated in sort of London, specifically City of London. Insurance is slightly more evenly distributed across the country. So although there's kind of the big sort of traditional insurance houses such as Lloyds, there's a huge amount of insurance companies in parts of Wales, but also in the other core cities within England, so Birmingham, Manchester, and Leeds in particular. So moving on to banking. So banking is kind of what a lot of people traditionally think of when they think of financial services, and they wouldn't be wrong. There's there's a large number of sort of banks operating within the UK with a high level of combined turnover and employing quite a lot of people. But what's interesting within financial services, there's actually quite a large number of sort of challenger banks, and these kind of fit into our high growth companies you can see there on the bottom left. We've seen sort of the rise of some new challenger banks such as Monzo and Revolut, which is sort of getting a lot of traction and crucially investment within the sector. So it's not necessarily completely as established as others. There is definitely room for scope and maneuver and sort of new businesses to kind of sort of thrive within the sector. So moving on to payments. Payments is a really interesting part of financial services because it's grown quite quickly. As you can see there on the bottom right, the number of sort of active companies has grown by 259% since 2011. A lot of that is driven by consumer trends as well. So you're seeing over that period, we've seen people moving increasingly over to sort of online forms of banking. And a lot of banks and companies have seen the opportunity to improve the infrastructure and improve sort of safety and everything connected to that. And that's both on a sort of consumer and business level as well. So some of you might be familiar with some of the new sort of challenger companies within this space, such as SumUp, is used by a lot of sort of sole trader, smaller companies. And these are kind of the sort of companies which are benefiting more from investment in terms of valuation. So what we've seen in the report in our analysis is actually that payment companies have received the best value add from investment compared to other parts of financial services. Moving on to cybersecurity, not necessarily something that people traditionally associate with financial services, but it's actually being recognized as an increasingly intrinsic part of the sector. So we know that around £11 billion per year is lost to fraud by banks. So banks are increasingly looking to cybersecurity companies to address some of these issues, and both in terms of helping their bottom line, but also reaffirming consumer confidence in their business. I'm sure a lot of you will be aware of sort of recent class action litigation and data breaches that have inflicted a number of large banks within the UK. They have reputational impacts on companies, but also on their ability to do business. So we've actually seen quite a large increase in cybersecurity companies over the last decade or so. And what's interesting about cybersecurity is they're not necessarily all concentrated within London, unlike banking and wealth and asset management. There's particularly large holdouts in part of Yorkshire, in particular Leeds, and over in Manchester and North Wales. So fintech is our final subsector in the report. So it's often kind of said that fintech is considered kind of the future of financial services, and to some degree, those people are probably right. There's been a very, very high level of growth within financial services, both in terms of the number of companies, but also in turnover and valuations and investment that we've seen into fintech companies. What's interesting is you see down there on the bottom left, we've got 1,500 companies which we consider high growth by the metrics outlined by Henry at the start. That's very high compared to other parts of the UK economy, and it's really one of the main driving points for financial services, or what we expect over the next 5 years as well. Cool. So that's kind of chatting through the individual subsectors. What's probably helpful now is if we show you where those companies are and what kind of the trends are within each sort of part of the UK. So England, unsurprisingly, hopefully won't come as too much of a surprise, accounts for a large share of financial services companies. So around about 90% of financial services companies in the UK are based in England, and around a third of those are based within London. Just to kind of reiterate London's position, specifically the City of London's position as a major sort of financial hub. But there are also other kind of strong performing cities as well, such as Birmingham, Manchester, and Leeds. But one of the main reasons why London outperforms others, one, because of the City of London's sort of regulation and tax regime, but also better access to capital for new businesses, but also the judicial system and access to the courts within London kind of helps reassure international investors, one, of the rule of law, and that they'll get a fair hearing in disputes. So London's often seen as a very, very safe place to invest for a lot of those reasons, and kind of why the city generally outperforms a lot of its sort of peer cities such as Paris, Frankfurt, and Singapore in this space. Oh, there we go. Yeah, and Wales. So Wales is there's obviously a lot fewer financial services companies in Wales relative to England, and similarly very concentrated both within Cardiff and Swansea. But what's interesting about Wales is, as I mentioned earlier, is at a very, very high rate of insurance companies. Some big players that you've seen, like you can see there on the left of the screen, so companies like Admiral, but also much smaller firms as well. Insurance firms generally account for around about half of the financial services companies within Wales, which is disproportionately higher than other parts of the UK. Scotland. So Scotland has a much more mature financial services sector than other parts of the UK. A lot of the companies are generally sort of concentrated within the central belt, so Glasgow and Edinburgh. What's quite interesting about Scotland, financial services in Scotland relative to other parts of the UK, is how international investors perceive them. So in 2014, neither Glasgow or Edinburgh were in the top 50 cities nationally, internationally for financial services. So they were lower down than Almaty in Kazakhstan and Mexico City. But by 2024, Edinburgh had risen to 29th, and Glasgow had risen to 37th. That's a very, very considerable jump in a relatively short period of time. And a lot of that is due to sort of government intervention in that scene, and also city level intervention. So, for example, in Glasgow, they've got the new International Financial Services District. JP Morgan moved in there a few years ago. It's kind of that's those kind of anchor institutions have helped build credibility and standing for places such as Glasgow and just broader financial services within Scotland. And then finally, just moving on to Northern Ireland. Northern Ireland has a much smaller financial services sector than other parts of the UK, but it's growing at a much faster rate, even more so than in England and in Scotland. Northern Ireland sector is quite uniquely placed. It benefits quite substantially from investment, both from the Republic of Ireland, but also from US investors as well. And it's kind of home to a lot of sort of industries that have foots in both camps. So we know that specifically a lot of American funds have a presence in Northern Ireland, such as 57 Stars, Kernel Capital, and Atlas Venture. So American and Irish Republic of Ireland firms within there. Cool. So just to kind of round this part of the session off, I thought it'd probably be helpful for us to kind of chat around some of the regulatory environment and sort of where we think the financial service sector is going to be heading over the next couple of years. So right now, hopefully it won't come as a surprise to too many of you. There's been a new government in the UK, and what's often in these cases when there's a new government, there's a little bit of uncertainty and a bit of a change up within the regimes. So after the last election, we've just seen there's new taxes and levies on carried interest within the financial services sector. And given the sort of wider fiscal context, it's likely that there'll be additional levies in some capacity within next year, whether that's in the spring or in the next autumn statement. But it's not all doom and gloom. There is also, the Chancellor's also announced a new financial services growth and competitive strategy, which is due to be launched within the next couple of months to help reaffirm investor confidence and in the sector. The second sort of tranche within this is kind of is looking at the Financial Conduct Authority, which is the UK's industry watchdog for financial services. It's a really, really good and interesting job in doing really sort of world-leading regulation for the sector. But it has been criticised recently for the amount of fines issued against companies who've engaged in malpractice or uncompetitive behaviour. So we know in the last year they've issued fines valued at £174 million against companies such as Barclays, the Metro Bank, and Starling. But moving on to what we think is coming down the track and big sort of comparative advantages for the sector. More so than probably any other part of the UK economy at the moment is financial services kind of uptake in the use of AI. So we know that around about 3/4 of firms are already using AI, and over half of investment banking firms are using machine learning to support their investment strategies across the UK. So it's good to see that adoption, and this has kind of been compounded by the National Cybersecurity Centre. They've published a new framework on how financial services can effectively leverage AI going forward, and it'd be interesting to see where that goes in the years ahead. And then finally, looking at sort of the ESG metrics. The financial services sector writ large has done a lot of work over the last decade in terms of addressing modern slavery concerns, and then also gender pay gap reporting. A lot of firms are also part of the task force on climate-related financial disclosures as part of a wider industry efforts towards sort of climate mitigation. What's also quite interesting is the sector is also part of Basel III. regime that was implemented after the financial crisis to improve sort of transparency across the sector. It's primary. Not all countries are involved in Basel III. It's primarily OECD and other advanced economies. But as part of that, financial service companies have a great deal of transparency in the space, and are also kind of investing within that as well. So we've seen recently the UK's infrastructure bank, for every £1 of investment of public sector investment into regional growth and climate change initiatives, an additional 4 has been raised by the private sector, and the vast majority of that has come from the financial services sector. Great. So that's kind of our a top line review of the report. And as I said at the start, I think I would encourage all of you to go ahead and read that in your own time. But at this point, it's probably helpful if I hand back over to Jill. Thank you.
Brilliant. Thank you, Callum and Henry, for that really good overview of the report. And a lot of those areas that Callum touched on are delved a lot deeper in the report, and other areas that we didn't get a chance to run through today as well. So as I mentioned at the beginning, that report will be shared on with all of you following today's session as well. But for now, I see we have a few questions after coming in, and just a reminder, there's a Q&A function on the bottom taskbar. If you do have a question, you can pop it in there and we'll answer it. So first up, there's one here. What are the main challenges that other Irish companies have experienced with the UK financial services sector? So Jack, I think you might be best placed to answer this one from your experience of working with clients here. Any insights that you'd be able to share on any challenges or opportunities you're seeing at the moment?
Yep. Hello, everybody, and thanks for joining us here today. I suppose fintech startups in the UK face a myriad of challenges because it is such a kind of highly competitive and rapidly evolving financial landscape, coupled with sort of the divorce between the UK and Europe from a regulatory standpoint. So I think the main challenge is, you look at the regulatory constraints, you look at trust, which is really, really important, and value, your value propositions stand out as significant hurdles. So I might just quickly touch upon some of those. So as our report will show, that the UK does have a robust regulatory framework designed to ensure stability and integrity in the financial system. And while this is beneficial for the overall market, it can pose significant challenges for fintech startups. And so, being guided by the Financial Conduct Authority, perhaps going into their sandbox, it can be very, very useful. We've Enterprise Ireland client companies. There's been a number that have gone through the FCA sandbox process, and have all come out with very positive feedback on that. And that's something that, if you are interested in, please do follow up with myself or Jill after this. We'd be happy to kind of signpost you towards that. I think trust is also crucial for fintech startups, and it's a difficult thing to establish, but especially in an industry where security and reliability are paramount. You're dealing with money, so consumers are often hesitant to trust new unproven financial services. If I look at the portfolio of Enterprise Ireland fintech companies, the vast majority of those would be kind of B2B SaaS business models, which is good in one sense because that is something that the industry understands. But it's tricky to build up that sort of trust relationship with large buyers like the pillar banks or big investment banks. The value proposition, I think, is really, really significant here. And this is something that we in Enterprise Ireland in the UK office do a lot of work with client companies around. Differentiating yourself in a crowded market is a challenge for startups. Numerous companies offer similar services, and as a startup or a kind of a new entrant to the market, you have to clearly articulate your value proposition to attract and retain customers. So this not only involves kind of innovation around products and services, but also in pricing You have to have excellent customer service and a seamless user experience. So that kind of account management function becomes really, really important in the fintech space. The old adage of innovate or die is really, really true in this market. I think the guys from Beauhurst demonstrated really kind of neatly just how rapidly evolving this industry and this market is for that. It's a high tech adoption market. So what we have seen, even just to take a small example of kind of regulatory and compliance technology, in 2018, we were doing a kind of a competitor analysis. We had somewhere in the region, we being Enterprise Ireland, we had somewhere in the region of maybe 10 to 15 regulatory and compliance technology focused companies. And they were going up against probably a cohort of maybe 400 or 500 competitors. Today, there are over 2,500 reg and compliance technology companies out there, each one of them constantly innovating. So that is a challenge that faces new entrants to the market. But without kind of scaring the horses, I would say, the biggest draw, particularly for Irish companies, is that often what you see is companies using sort of Ireland as the beta market, and then the UK becomes the primary market. And our own results in exports in this sector have been growing, double-digit growth pretty much every year, with the exception of the COVID year, 2020. Because we have great interpersonal and relationship building skills, we have a great network on the ground. Enterprise Ireland are well positioned to help companies scale up. And then there are a number of kind of key strategic networks and events that we would always kind of signpost companies towards. So I've probably been answering that question for a little bit too long, but it's a long and kind of sprawling answer, I suppose. But they would be some of the key factors in that one, I'd say.
Brilliant. Thank you, Jack. And no, there's definitely a lot of considerations when companies are looking to kind of enter the market here and grow. And just to say as well that in the report, we do have 2 client case studies who have been successful in the UK and still are to this day. And 2 different types of companies, actually, one that entered the market years and years ago and one more recently. So when we share in the report, you'll be able to see that as well as just examples of client experience here in the UK. And Jack, you just touched on the FCA there, and I just see we have a question after coming in that you might be able to answer as well. So the question is, do you have any sense of how long it's typically taking on average for the FCA to approve new EMI licenses? And additionally, are you seeing any trends whereby the FCA are becoming more stringent on the requirements set out on companies looking to become e-money institutions?
Okay, so in terms of a timeline on when you get your e-money license, I don't know the exact answer to that question, but I do know that the FCA themselves have a commitment, kind of a minimum, I think it's not 90-day commitment to evaluate all proposals that come through. So, if you have an A1 proposition and your company is watertight and your security is amazing, you might scoot through that process in a reasonably quick time frame. I think comparatively, and I hope I'm not going to get myself in trouble by saying this, I think that the FCA is probably seen as a much quicker route maybe than going through the Central Bank of Ireland. Obviously now it's considered a third country, so the regulatory environment requires you to be licensed in the UK. But then just kind of a little side point to that one, which is the FCA sandbox process for testing technologies. That used to be kind of a cohort driven. So, you might have a Q1, Q2, Q3 cohort. And last year, I believe they switched that to an always on model. So you will at any point, you are able to engage with the FCA through the sandbox function to test your technology. But if it's a straightforward license application process that you want to do, reach out to me and I'll follow up and find out if we can get estimates of timelines. But I do think that they I'm pretty sure that they try and see everything within 90 days, at least to give you a first kind of response.
Brilliant. Thank you, Jack. So another question in here. So you mentioned about highly skilled workforce, but there's a lot of talk about skill shortages in the UK. Is this the case in the financial services space? I know this has kind of come out a bit in the report as well. So Callum, Henry, you might be able to touch on this one.
Yeah, I can come in on this one, and if you'll give me a shameless plug, we actually published another piece of research yesterday with
Brilliant.
Barclays Bank that also touches specifically on skills in the tech sector, so including in fintech, but also within the wider tech sector. And it's a bit of a mixed bag, is the honest truth. Certainly because of the sort of a slowdown in demand overall for tech and digital skills. So down from basically the pandemic highs, and some of that is due to the macroeconomic circumstances. Some of that is due to shifts in the demand for skills being caused by AI. So those sort of two effects are having a sort of confluence that actually demand is down. That means then that sort of the availability is actually improved compared to say two or 3 years ago, when demand was driving up prices and making it harder to get the skills that people need. Nonetheless, that report also still identifies some persistent gap, and indeed it calls out a few companies that are actively helping to plug that gap with new technologies. So there are two companies in particular that are featured. One called Beamery, which uses AI themselves to help you sort of map your workforce and the skills you have, and how you might address the skills you need through internal existing human resources. And then there's another company called Ivy that's called out there, which is very interestingly working on helping people return to work after a break. Again, often they have a lot of the right skills, but maybe the language around them has moved on, or for various reasons they're not able to quite meet the skills demand as articulated by the various jobs posting. So there are sort of interesting, that maybe a bit of a meta answer, that there are interesting trends and solutions helping to plug that gap. I think the overall sort of macro headline is that actually, if you are out there hiring and have very specific skills you need, the downturns we're seeing on some macroeconomic fronts are actually good news, and making the pool of available human capital a little bit deeper than usual, or rather deeper than 3 years previously.
Brilliant. Thank you, Henry. No, that's great. And kind of keeping with that point, I suppose, around the labour market, and it might be something that you might be able to come in and Jack as well on client experience. But someone's question here is: we are a financial services business in Ireland looking to expand into the Northern Irish market. Given the post-Brexit landscape, do you foresee continued movement and freedom of labour between Ireland and Northern Ireland?
Yes. So yes is the short answer to that question. We have when the Brexit preparation work was going on, we were sort of talking to both UK buy side and our client companies about the 3 Cs, which was the common law, the common language, and the common travel area. So the Common Travel Area Treaty predates the European accession treaty, whenever that was in the 70s. And so, yes, you will still be able to move freely and work, I believe, freely between the 2 islands. And more.
Great, thank you. And maybe keeping with the Brexit theme, there's just a bit more of a broader question here, but any more information on challenges, opportunities that have arose in the FS industry post-Brexit? I don't know if Beauhurst, you might have, I know you went a bit into the regulatory space in the report, if you can delve a bit deeper into that.
Yeah, so I'm very happy to say that one. I know we kind of touched on it a little bit in the report itself, but post Brexit, I think it's quite clear that specifically the City of London has remained quite buoyant. We've seen, it still outperforms other sort of global peers, both in terms of investment and company growth. But what is also clear is that lead is narrowing. So we've seen the UK's overall financial services export surplus shrink around about 28% since 2008. That's with the European Union. It's still a considerable gap, and we've got a little bit more detail on this in the report itself for you to read. But I think with the new government's kind of come in with a number of announcements on improving relations, specifically within financial services between the UK and the European Union. I think it was in December the Chancellor made an announcement at the Eurozone meeting of finance ministers, calling for sort of fewer barriers, and it's a bit of a win-win in terms of improving the regulatory standards. So I guess that kind of comes. It appears to a lot of sort of commentators within the space there appears to be two immediate options really for the UK and the EU to proceed on that mark, which will impact financial services businesses both within the UK and in the Republic of Ireland. The first would be implementing a sort of mutual recognition agreement for professional qualifications. So standardizing recognition for qualifications. If they were to do that, that would enable practitioners within the EU and the UK to interoperate between and move and work in reciprocal markets. At the moment, there are restrictions on practitioners operating within non-UK and non-EU markets on both sides. So that's something that's getting discussed, but I guess remains jury's out on that. And the second and slightly more complex option that's also being discussed is sort of implementing a new Berne financial services agreement. So the Berne agreement is the sort of financial services agreement that the UK has with Switzerland. And that's a very deep level of cooperation. So Switzerland's within the EEA, the European Economic Area, not the EU. So there's different rules and standards there. So that would be more comprehensive. It would likely take a lot longer to agree, just on the nature of negotiations between the two parties. But again, I think jury's out on where that's going to go, and I think really for a lot of businesses and commentators in the space, a lot will kind of hinge on this new strategy that the government's intending to release within the next couple of months, and that will probably have a further insight on what the Chancellor and the Treasury and Number 10 believe the new road path to better relations in the financial service sector with the EU looks like. Sorry if slightly might have covered that one a little bit long, but
no, that was really helpful, Callum. And Jack, do you want to jump in there?
Yeah, just a quick one, I suppose, on where some of the opportunities might be as well. So obviously, if you are staying tuned to the Enterprise Ireland kind of reg updates, which I'm sure you all are, DORA, the Digital Operational Resilience Act, which came into effect on the 12th of January this year, and we're now in this kind of grace period of 1 year, means that all financial services institutions that want to do business with the EU will have to be compliant and have that kind of digital operational resilience piece worked out. So there are opportunities out there still for Irish companies to work with UK partners who have business within the EU. The news of DORA, I suppose, didn't really resonate or it wasn't very widespread here in the UK. And so as a result, some financial institutions, certainly from speaking with people, feel a little bit behind the 8 ball on that one. Now, obviously, the very large players will have been out ahead of this and will have operational resilience packages in place, for want of a better phrase. But if you take, you know, a large bank like, say, JP Morgan, they'll have over 2,000 suppliers that they need to make sure are all compliant as well. So where you see those kind of reg divergences, and I'm only calling it a divergence because the UK also has an operational resilience protocol in place, but also things like the AI Act. So there's a UK AI Act and there's an EU AI Act, and there are subtle differences there. And there will be the cybersecurity regulations coming through. There's going to be a review of things like MiFID and AIFMD, which are the kind of the regulatory frameworks that guide asset managers. And every time there is a slight step change or a kind of a parting ways, they will present opportunities for Irish companies targeting the UK market.
Brilliant, Jack. That's great. And a great plug there for our content generally as well. So I'll drop our LinkedIn into the chat if anyone wants to follow that to keep up to date with their events. So another question there, Jack, and I suppose following on from your previous point, a client has just said that they're planning to visit the UK market in the next couple of months and are wondering around specific events that might be good to attend.
Yes. So why don't I'll answer that one specific to events, but also maybe touch on kind of some of the other key networks that I think it's important to be aware of. So, you know, in terms of events, we've just had Finovate UK here, which is a very well attended one. In the wealth and asset management space, you know, you have the Global Wealth Management Summit. You also have the Funds Congress, which is, and again, shameless plug here, which is sponsored by an Enterprise Ireland client company, Carn. That's a massive event. The Global Banking Summit is here. On the insurance side, you know, you have the ABI, which is the Association of British Insurers. They have their annual conference. And they're just, you know, that's just off the top of my head, some of the bigger ones. And there are, you know, there are a couple of really big conference providers like Informa and Terraform, I believe, the Financial Times and Euromoney. Obviously, other conference providers do exist, and I'm sure our friends at Beauhurst probably run a series of kind of things as well. So there are loads. You could potentially go to one every week if you were that way inclined. But the ones that I've mentioned are probably the key ones, I would say, in the industry. And then just in terms of networks as well, you know, obviously the Financial Conduct Authority sandbox is a great one, because not only are you plugging into that industry, you know, the FCA are based down in Canary Wharf, that you will have the eyeballs of the industry on you there. You know, the Lloyd's Innovation Lab, I think we're on cohort 11 of that one as well. Again, you have the eyes of the industry watching what companies go through that, and you kind of, not only are you buying validation by going through that process, but you're also developing a really, really strong network there. Future Finance is a fully funded accelerator program designed to provide SMEs in financial services with support, you know, insurance and lending, advisory, advisory, payments companies all go through those, and that's delivered by UKRI. And I would say, to round it all off, I think that the CISI is also a good network. They have a number of good events, plugging in, you know, in the Scottish market, because we don't want to forget our friends up north. There is FinTech Scotland, and they do some great work up there and run some good events every year as well. So lots of networks to try and plug into, and a number of events to attend. But I guess that's the nature of trying to get established in a new market.
Great. Thank you, Jack. And yeah, definitely worth kind of walking some of those shows that Jack mentioned and connecting in with some of those networking groups in trips to London as well. So that's great. And Jack, just coming back to you just on the DORA piece, we just have a question on that. So the question is, Jack, those UK companies who have yet to address the DORA requirements, as an Irish consulting company who have completed DORA compliance activities for companies, with supports of EI and others, how can we best identify some of those companies and maybe even get an introduction?
Yeah, I mean, I think it's a question of picking up the phone and speaking to the digital operation resilience people within these organizations. I know that we Enterprise Ireland had done a piece of work up in Scotland to try and figure out who was compliant and who was sort of nearly compliant, so to speak, and within a relatively short space of time, you can develop out these lists. Again, I would say being present in the market is a huge help there, because particularly things like the insurance industry here in the UK, they're very relationship driven, not too dissimilar to the Irish kind of way of doing things, although slightly different, certainly. So it's about contacts. It's about you leveraging the contacts you have, leveraging the contacts that Enterprise Ireland have, and picking up the phone and talking to people. There's no way around it.
Yeah, definitely. No, that's great advice, Jack. And you kind of touched on it there, but I think we see it a lot working in the UK, how strong the Irish diaspora community is over here as well. So leveraging that as well and engaging with relevant people and organizations, even if it's not your target buyer, just have an open conversation with them and try and identify some of those pain points, and trying to figure out if they're compliant as well at the moment is great.
I would just one last one on that. A good place to go is actually the Institute of Directors, which is based down near St. James's here in London. They will have kind of in-house discussion groups where people kind of talk about what's keeping them up at night or what the challenges their businesses face, so to speak. And again, EI, we have some contacts in there. And again, that's something that should be used and leveraged to try and open some doors as well.
Brilliant. Thank you, Jack. And just conscious of time, so if there are any other questions, please do throw them into the Q&A. Just double checking if there's any others after coming in there. No, I think that's it for now. Okay, well, thank you all for joining us today for the launch of our UK Financial Services Market Report. So we hope you found the insights and the information valuable. And as we said, we go into a lot more depth in the report. So it'd be great if you can read that at your own time. And we would appreciate any feedback that you do have on that as well. A special thanks to Callum and Henry from Beauhurst as well for developing the report and the comprehensive overview that they gave today. So as I mentioned at the start, the recording of this webinar and the full report will be shared on with you shortly. And if you have any questions, Enterprise Ireland are here to support you. So please do reach out to myself or Jack if there's any way that we can support you following on from this session. But we wish you the best of luck with your UK growth plans and look forward to catching up with you again. Brilliant. Thanks, everyone.